Let me record. So contraction and expansion is just a concept that you just need to know. Contraction and expansion. So contraction also means range, also means consolidation. So it's just something that you just need to know at the back of your mind. You don't need to do homework on it. Yeah, it's just something that whenever you see a range, right, you should expect an expansion after that. So this will be the contraction, ranging, then expand, which is this part now. This part. And then, so sometimes price will make a higher high. If you go to the lower time frame, you will see a small consolidation. That's the contraction. That's this. So contraction means they're picking orders. The market is picking orders into the the institutions are picking more orders before they move. So when they pick enough orders, then they expand, maybe to make a higher low. Then they contract again, range to pick more orders, buy orders, then they go up. Contraction, expansion, contraction, expansion, contraction, expansion, contraction, expansion. Okay, that's how the market moves all the time, with contraction and expansion. Consolidation, expand, consolidation, expand. If I go to this chart here, as you can see here, right? Even if we start, where can I start? Even here, right? Contraction, expansion, right? If you go to the lower time frame, there was a contraction here, like maybe 15 or 5 minutes. That would be a contraction. Then expansion again. Contraction, expansion. Contraction, expansion. Another expansion. Contraction here, expand. Another contraction here, expand. Contraction, expand. Now we're having this big contraction here. So after this, we expect a expansion, either down or up. So whenever you see a ranging, expect the expansion after that. If you see this contraction here, expect expansion, contraction, expansion, contraction, expand, expand, contraction. This was a big contraction here. Expand, contraction, expand. So that's how the market usually moves, depending on the time frame that you're using. Price will be moving with the contraction and expansion. The bigger the contraction, the bigger the expansion. The smaller the contraction, the smaller the expansion. So if you go to this, if you go to daily, right, as you can see here, this was the contraction here, this one. Contraction for 2 months, big expansion. Contraction for 1.5 months, big expansion. Contraction for like, how much was this? This was what? 1, 2, 3, 4 months, then expansion. Contraction here, expansion. So whenever you say contraction, expect an expansion after that. It's just something that you just need to know at the back of your mind. You don't need to do homework or anything. That's something that you just need to know. That's it. That is all with this part. That's all. Right. So now let's go to lesson 3 now. Order blocks, the important stuff. What is an order block? Now, order blocks are specific candles that are used by institutions to buy or sell currencies. So we have 2 types of order blocks. 2 types, a bearish order block and a bullish order block. 2 types. So what is a bearish order block? Sorry, a bullish order block here. A bullish order block is the last bearish candle on a downtrending market or downswing. So a bullish order block, a bullish candle, which becomes an order block, is going to push price up. When price comes back to that order block, price will go up. So let's see. So a bullish order block, if we have a last, so let's say we have something like this, the last down candle here, the last down candle here, that's our bullish order block. So when price comes back on that order block, price is coming back to pick orders, to pick buy orders. That's why we say bullish, buy orders. Once they pick up the orders, price goes up. So the bullish order block is going to push price up. That's the bullish order block. And the bullish order block is a bearish candle. Don't make the mistake of thinking that a bullish order block is a bullish candle. No, 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 no. It's the opposite. A bullish order block is a bearish candle. Take note of this. Take note of this. Then a bearish order block, that's the one which is going to push price down, always pushing price down. That's the last bullish candle on an uptrend. So if this was an uptrend and downtrend, this here, the last bullish candle here, before this reversal, that's our bearish order block. That's where we have sell orders. So when price comes back to pick those sell orders, we are also going to sell with them. Then price goes down. So a bearish order block is a last bullish candle. It's the opposite. It's the opposite. So how do you know that this is an order block? How do you know that this is now an order block? So if, as you can see, we have a down and upswing, right? It's going to be like this. And I'll show you the other picture. So this is the last down candle, this one. So when do you know that this is now an order block? When the next candle closes above this candle, it becomes a bullish order block now. When the next candle closes above. So sometimes it's not the next candle, sometimes it's the third candle. So for example, let's say the second candle here, this closed here. So it's not an order block yet. So you have to put the line here. Right. And let's say even here there was a wick, there was something like this. So it's not an order block yet. This is not an order block yet. Then the next candle, let's say sometimes, okay, so now when the next candle, where is it? Here, closes above, now is a bullish order block. Now you can mark it, you can highlight it, okay? Let's say, for example, the third candle did not close above, so again, it's not an order block yet. Then the fourth candle, again, not closed above, then the fifth candle closes above. Now is a bullish order block. Okay, so it can be the second, third, fourth, or fifth candle. Once they close above, it becomes a bullish order block, a valid bullish order block, just like it is written here, right here. So what do you mark on the order block? If it's a bullish order block, you mark the close and you also mark the 50%, the mean threshold, the equilibrium of the order block. So when price comes back, you can buy from, so let's say sometimes there's a wick, yeah. So you can even mark the wick also. But there are certain pairs that respect the wick more than the body. So your buy is going to be in this area here. This area, that's where you're going to buy, in this area. So as long as price is still reverses inside here, the order block is valid. When does the order block become invalid? When price comes down and price closes below the 50%. So if price closes below the 50%, it's no longer a valid order block. It's no longer a valid order block. Now we look at the other concept that I'll teach you later on. Right. So a valid order block is the one where price will reverse on the wick or the close or in between here, this 50% here, this one. So if you mark, as you can see here, so price comes back to the order block. Where is that thing? So here, price comes back. So as you can see, price comes down. So this is the reversal area, this one. Don't look at this as support. We don't use support and resistance. We have in ICT, we have our own support and resistance, which I'll teach you later on. Right. So this down and up, price goes up, this becomes an order block. When price comes back to pick more buy orders on the bullish order block, then we buy. Then price goes up. So now it looks like this. It's a type 2 reversal. Now this is now a valid order block, this one. This candle is now valid. It's now a valid order block. Why? Because this candle closed above. So later on, when price comes back here, we can buy again. Then price goes up. So this will be our higher high, higher low, higher high somewhere here, then higher low here on the order block, then price goes up. Right. So where is my paint? Right. Right. So just like I told you last time, you need to master market structure. Market structure is very important. Why? Because we are going to use market structure to identify the correct order blocks. I'll repeat again. We use market structure to identify the correct order blocks. If you don't know market structure, it's going to be difficult for you. That's why I was saying you need to do homework on market structure. Why? Because if you know the foundation, everything's going to be easy after that. Everything I'm going to teach you until the end, I'm going to put it on top of market structure. It's going to be easy to see all those things with market structure. So it's very important that you do market structure. You master market structure. You master the daily, the daily structure. If it's bullish, how it looks on the 4 hour and the 1 hour. Also, if 4 hour is different than 1 hour, how do you trade? You need to know all these things. And I taught you all these things in the last 2 lessons. So it will make it easy for you to pick the right order blocks. If you don't do the homework, well, that's your own fault. That's not my problem. Anyway, so from daily time frame to monthly time frame, all the order blocks are important. All of them. Why? Because the more we go to the high time frame, we have less candles now. So all the order blocks on high time frame are important. If you mark those order blocks, when price comes back to those order blocks on lower time frame, you are going to get a reaction. You always get a reaction on those order blocks. Always. Either let's just for example, you can either get a complete reversal. Okay, let me put it like this. Let's say this is a daily order block or weekly order block. When you go to the lower time frame and price is coming back to the order block, you are going to get a complete reversal. Or number 2, you get a short-term reversal. Okay, so there's always going to be a reaction on those order blocks, always. So all the higher time frame order blocks are important. Now, from daily, now coming down to 1 minute. To 1 minute. Now, as we go to the lower time frame, we now have many candles and many order blocks, a lot. So now, which order blocks are important? The most important order block is the order block before breaking market structure. That's why I said market structure is important. You need to know the correct BMS and the fake BMS. That's why I said do homework. Right. So you need to look for the order block before BMS. Any order block that breaks market structure, that's the one that you want. That's the one which was used by the banks to push price up or down. So order block before BMS. That's the one you want. And as you can see, it goes back to market structure. So let's go back to our market structure. Price makes a higher high, makes a higher low. You mark your range, this high, this low. Then price break market structure here. The moment you see this BMS, start looking here, from here, start looking here, start looking back. From the BMS area, start looking back for the bullish order block. So this is an uptrend here. So looking for, in an uptrend, we're only looking for bullish order blocks. A bullish order block is the last bearish candle before the BMS. So if it's here, you mark it, highlight. Why? Because that's the way you're going to expect your higher low. That's where you're going to get the higher low. Higher high, higher low on the order block. We now have a new range. This high, this low. And we always want the one in discount. The order block should be in discount. So maybe this was an old order block also here. This one was an old order block. So when the price comes back to the order block, we call that RTO, which is return to order block. So all of this is a RTO. No, let me change the color. This is a RTO. This is also RTO. What does that mean? It means price return to the order block. Then when price comes back here, you buy, we buy on the order blocks. Break market structure. The moment you see this again, start looking back from here. Start looking from here. Don't look from down here. Here, start looking right here. Start going back and look for the order block, the last order block, that broke market structure. Sometimes the order block is very big. It's very big. So let's say it's like this. That's the order block. Then you mark the equilibrium. That's your order block. So as you can see, it's also in discount. Price goes up, makes a new higher high, comes back to make a higher low on the equilibrium. We buy, then again, break market structure. So we always want the order block before BMS in discount. Then if it's a downtrend, same thing, lower low, lower high, BMS. Once you see this BMS, you start looking back here, from here. Start going back and look for the last bearish order block, which is the last bullish candle. It's a bullish candle. So if it was here, somewhere here, you mark it, that's the one you want. And it's in premium. So when price comes back to make a lower high, you sell here on the order block. Then BMS again. And then you, again, once you see the BMS, mark your order block. Always mark the order block. Look for the order block. If it's a big order block like this, you mark it. Also equilibrium. I forgot to mark the equilibrium here. But it's the same thing, right? And then lower high on the order block. Then you sell, then BMS again. And you just look for the order blocks. So you continue looking for the order blocks. So all of these are return to order block, return to order block. So with the return to order block, you write it here. You have to write it right here. That's where you write it, here. Return to order block, return to order block. This was the BMS. This was the lower low. This was the last, also this was the last lower high. So it's a lower high and also a return to order block. This, I made a mistake here. RTO, and also it's a lower high. So now you put both. You put both RTO and lower high. Again, lower low, lower high, RTO. This is the BMS, or the BMS here. So now that's how you mark your charts now. So now, when you're marking your charts, it's lower low. Wait, okay, let me just start from here. Okay, I'll start from here. Lower low, lower high here, break market structure, and then look for order block. Before you look for a lower low, look for the order block first. Then once you find it, then now you look for the lower low, then lower high, and this will be a return to order block, this one. Then BMS. After BMS, look for the order block. OB. Right, we call them OBs. For an uptrend, it's higher high. It's higher high, is higher low, is break market structure. Then look for the order block. Then now you can look for the new higher high and the new higher low, which is now our RTO. Then BMS, then order block again. That's how you mark out. That's how you look at the chart now. Higher high, higher low, BMS. Before you look for the new higher high, look for the order block. Then higher high, higher low, BMS, order block. Here, higher high, higher low, RTO, BMS. Look for the order block. Higher high, then return to order block. So you want the order block before BMS. Now, let's look for an example here. Price comes down, makes a lower low. Price makes a lower high. Price breaks market structure. We have a new lower low. Then they break the structure high. So now we have a type 1 reversal. BMS, BMS. Once we have this BMS here, once you see this BMS, you look for the order block. So now we are bullish. In a bullish market, we look for bullish order blocks, which are the last bearish candle. So the last bearish candle here is this one here. So you highlight from the order block, highlight from the order block. Then you mark it just like it's marked here. So now price goes up, makes a higher high, comes down, makes a higher low. And the higher low is the return to order block. Then you buy, we buy here. Price goes up, breaks market structure. The moment you see a BMS, look for the order block. Go back and look for the order block. The order block is this one here. Then now you can look for a higher high. Then higher high, price comes back, higher low, new higher low. Also return to order block. Then you buy, price goes up, and then they break structure here. Once they break this market structure, look for the order block. It's this one. This is the last order block. So you mark this order block here. So later on, when price makes a higher high and comes back here, we buy. Then price goes up. As you can see, this order block is in discount. This order block is in discount. Okay, now I forgot to mention this. The only time you don't pick the order block in discount or premium is when something like this happens. So let's say, for example, higher high, higher low in discount, higher high, higher low in discount, higher high, higher low also in discount. So all of this will return to order block, return to order block, return to order block. And this is our new high, this one. So now let's say something like this happens now. Price goes up and breaks structure, but doesn't continue going up. And then we have a new higher high here, a new higher high. And your order block is here, right here. Right, so now if you take a Fibonacci from this low and this high, our equilibrium is here. So now, as you can see, this order block is now in premium. It's not in discount. So this is the only time you don't pick the order block before BMS, if the order block is in premium. So if you see something like this, you should be looking for the one down here in discount. So look for the one in discount. If it was somewhere here, that's the one you pick. So the order block, it has to be in discount or premium. If it's not, don't pick it. If the order block before BMS is in premium, don't pick it. Look for the one in discount. Here, then you buy, then price goes up. Same as a low downtrend. These are all in premium, also in premium. Then they break structure here, and the order block is here. But if you take this high and this new low, and this is the equilibrium, this order block is in discount. We want the one here in premium. So you're going to pick the one in premium, which may be somewhere here. That's the one you pick. I'll show you the examples later. And then lower high, and then lower low. That's the only time you don't pick the order block before BMS. Right, so this is the bullish order blocks. For bearish, as you can see, this was a higher low, then a higher high, then a BMS. Once you see this BMS here, you start looking back. Where is the last bearish order block? In the premium is this one. And then you mark it, you mark the wick and the close and also the equilibrium. When price comes back, so here they used the close. Price comes back, so this is now a lower low. Price comes back to the order block, you sell. And this is now a new lower high, also a return to order block. So you sell here, price comes down, break market structure. Once we see this BMS, this is now our order block, this one. That's our big order block. You mark it and you mark the equilibrium. So later on, when price comes back to make a lower high, you sell, then price comes down. So in a bullish trend, we are only looking for bullish order blocks. In a bullish trend, we only look for bullish order blocks. In a bearish trend, we only look for bearish order blocks. And it's the bullish candle. In a bullish order block is a bearish candle. Right. So let's look for example here. I'm going to use this example here. I'm going to start from here. This whole area here. Right, as you can see, higher high, higher low. The moment you see this BMS, look for the order block. Where was the order block? It's a bullish order block, which is a bearish candle, is this one. Price goes up, makes a higher high, comes back, makes a higher low, return to order block, RTO. Okay, price goes up, does not break structure, so now we have a range. There was no BMS, price comes back, but even though price went up and did not break market structure, this was a new order block, this one, because this candle closed above. So price comes back again to the same level to buy. Then now we have a BMS here. Once you have this BMS, this is your new order block, this one. That's your new order block. So if price had come back, let's say price decided to come back, you would buy here.
Peter. Hello, Peter.
Yeah.
I have a question. You told us that if the 50% mean threshold is broken, so we don't consider it as a valid order block.
Correct.
Yeah, right here.
Wait, before you, what did I say after that? When I said that if the order block, if price closes below the 50%, what did I say after that?
It is not validated.
Yes, but then what did I say after that?
If again the price goes up,
okay, what I said is, if price comes back and does not close below the 50%, it's a valid order block. But if it closes below the 50%, it's no longer a valid order block. But, and now we look for other concepts that I'm going to teach you later on.
Okay.
Yes. If it closes below the 50%, there are other things I'm going to teach you that you look at, which is not today's lesson. There are other things that you look at, and which can still support that order block again. That's yeah, but yeah, it's a lot of stuff I'll teach you in the future lessons. Yeah. But even if the order block price closes below the equilibrium, look at your market structure. Look at your market structure. What is market structure telling you? What is market structure telling you? Because price can close below the 50%, but then we are still bullish.
Yeah.
Okay, but that's for the future lessons.
Okay.
Then price goes up, makes a new higher high, comes down, makes a new higher low, goes up, there's no new higher high, comes down, there's no new lower low. So we have a range of this high and this low. That's saying we have a range now. So our key levels are this high and this low. That's the key levels. As long as they don't break this high or low, we're in a range. But as you know that in a range, if you go to lower time frame, here, we have a lower low, lower highs here, higher high, higher lows here, lower low, lower highs here, higher highs, higher lows here on the lower time frame. So now, this is the monthly chart. This one is a monthly chart. Let's go to the weekly now of the same level. Oh, anyway, I forgot to mention this, right? As you can see, when price came down here, so as you can see, when price came down and there was no BMS, and then this candle closed above, this was now an order block, this one. This was now a bullish order block. So when price goes up and comes back, we can buy here. We bought, we can buy here. And as you can see, they respected the candle close, the close of the order block. So we can buy here. Why would we buy? Because we are still bullish. There was no BMS of this low here. So we are still bullish. And then price goes up. So let's look at the market structure here. Of this internal structure here, this was a lower low. Okay. Okay. For the major structure, higher high, higher low, using blue. For the minor structure inside, this was a lower low. This was a lower high. This was a failed to make a new low. And then this is the BMS. This one, that's the BMS. Type 2 reversal. Once we see this BMS, this is now an order block. This one. And as you can see, look at how price reacted there. This one. Look at how price came back right into the order block. They are coming back to pick orders, to pick buy orders. So the order block is where they start to buy. That's where they begin to buy. But then there's always remaining orders. So they want to come back and pick the orders. So when they come back here, we can buy. Here, when they bought, as you can see, this is the big candle, a big bullish candle. They bought here, but there were now some remaining orders on this candle. So they have to come back and pick the orders. And here they came back. That's what that's what they're doing. So now this is the monthly chart. Let's go to the weekly chart now. This was the order block here. Now this is the weekly chart. So major structure is this high and this low. That's the major. And now the minor is all of this. This is the minor here, the minor. So let's look at this level here. This is a higher high. This is a higher low. This is a fail to make a new high. And if you notice, most of the time when price fails to make a new high in a type 2, this here, this failure to make a new high is always on the order block. Is always on the previous order block, which is this one. This order block here. Whenever price fails to make a new high in a type 2, they fail on the order block, on the old order block. Same here. This is a type 2, this one here, type 2. Look, this failed to make a new low was on this order block. They always fail on the order block in a type 2 reversal. Right, so fail to make a new low, then we have a BMS here. So now this is the BMS right here, this one. Once you see the BMS, you mark the last order block. Before you look for a new lower low, mark the last order block. It's this one. This one here. Then you mark it, price comes down, makes a new lower low, price goes up, right there, as you can see, right in the order block, a new lower high. Also, RTO, return to order block. Then you sell here, that's where you sell. Price comes down, break market structure here with this candle. Where's the last order block? The last order block is this one here, this green candle here. So this candle broke structure and also was the return to order block. Yeah, that's what they did here. But anyway, not looking at that, if we were just looking, if we use what I taught you, after this BMS, this is the lower low. But this time there was no lower high on the order block. There was no lower high on the order block. Just like I said last time, sometimes price does not come back to discount or premium. Same thing with the order block. Sometimes they don't come back to the order block. They continue going wherever they're going. Even here, this one, this is the last order block. This is the BMS, this is the order block. They did not come down here. They continue going up. So sometimes they don't come back to the order block. They don't come back. So then this is the lower low. This is our lower high. I think it's more clear on the lower time frame. Then this is the BMS here. Once you see this BMS, mark the last order block. It's this one. This green candle here. Then now you look for a new lower low. This is the lower low. And this was the lower high. This one. Return to order block. Right there. You sell here. Then BMS. Okay, 1 minute left. Let me give you the new link.